Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's update our view on the gold market. So today as usual we also have prepared the weekly report on the gold market, have taken a look at the few specific moments of the United States liquidity that have relation to United States-China relationships. So there also might be some negative impact from the China, because if you heard this that they could start selling the United States Treasury bonds, which they have actually around 800 billions. It's only treasuries, but also they have the agency papers as well. Hong Kong also have approximately 200 billion, sorry. So it might be really big impact. So currently markets really will have difficulties to absorb 10-20 billions in a moment. So that's why any amount that China could start selling, even the 50 billions, it might be already bring some negative impact in the market. So it's one of the moments that we need to consider. Besides, we have taken a look at some progress in AUKUS block progress, and actually some really direct steps now into the confrontation with the China. And well, that makes us think that in a shorter term, mostly we have come to the same conclusions, that gold probably will be under some pressure. It doesn't mean that it will show significant drop, just because you can see gold resists actually very well to the negative impact. It's liquidity drought or something of that sort. Although we thought that might be even deeper retracement, but market currently stands really stubborn around the current levels, and temporal shift in the investor sentiment, which has happened last week, probably could make this impact a bit softer, negative impact, just because market starts expecting easing from the Fed that should come earlier, and well, which actually means that market not really believe to the Fed promises and the European Central Bank promises, and that could actually let gold to minimize the negative impact right now, especially when we will see in the next month, in July, August, turning of the inflation up again. That might be additional supportive factor. So currently gold stands really well, but anyway, whatever it will happen, if market will drop significantly, even to the 1850 yearly pivot point, it doesn't mean that bullish trend is over. So currently any downside action somewhere to any moderate action to the downside, I would say, we should treat as a chance for accumulating physical gold and making more investments, because in the longer term the geopolitical situation is becoming unpredictable, negative processes are accelerating, and with the so big debt that the United States government has, it's just impossible to cover it in any way except printing, and any printing means inflation. So to combine both of the things, geopolitics and really big problems in the United States from the debt point of view, this makes us to conclude that interest rates could become really negative in the longer term, probably in 2024. And once the first upward rally on the gold is over, since we have started our journey somewhere from the 1650 area, so we could say that first stage is over. The market right now stands in pullback, but the second stage is yet to come. And that's why any pullback currently, we should treat as a good chance to accumulate more gold for the physical investment. Here I'm not meaning the trading with the margin, some leverage, but I'm speaking about the investment. In the shorter term, we just will follow our trading plan, and if we will get the bearish context, I don't see any problems why we can't take the short position in the gold market on the daily chart, on the daily intraday basis. So it's absolutely normal. So meantime, on Fridays you could see that market hasn't changed at all, so this just was minor performance here. And in fact, I think that in the coming week we have actually the major task is to find the area where market theoretically could continue downward action. So how far market could climb on this retracement. Right now we could say only about 1980 area that probably should be retested. It's just because of the grabber that we've got. It suggests the taking out of the stops, which leads us right to retesting of these previous lows, this previous stop, all the stuff around 1980, 1985 area. So it probably will be our first destination point on the next week. On the 4-hour time frame chart, I do not see something really interesting. Yes, we have the bullish divergence here, even with these 2 points as well. So we have endured this, make it longer right from these lows. But we could actually suggest maybe some head and shoulders or even double bottom or something of that sort. But you can see how market is choppy here. And this is not typical for any of these patterns. I mean, head, shoulders and double bottom. So that's why I think that we should start from something else with a maybe lower scale. So take a look at the hourly chart. Here stands more or less more proper trading setup that we could consider. Here we have great thrusting action of the Thursday. Minor hand and shoulders, as you can see on top. Some kind of the reverse hand and shoulders that we could start with, and actually kind of the good engulfing composition right there. And that's why, well, I think that we start Monday with the monitoring of the 1946, 1948 area. See, agreement support, OP. Actually, if you use initial ABCD pattern here, you also could get the XOP right around the same level. So just take a look at this ABCD. You see that XOP stands at the same points. I have shown you this XOP probably on Friday. So that's the first level that we will consider. This level is also acceptable. It will not break the overall bullish context if market will drop there, but at the current point, at this upper direction, well, this level just seems a bit less probable to be achieved. That's why we will focus first on this one and then see what will happen. If drop will be more or less fast, or something of this kind, maybe we will switch our attention, turn our attention to the XOP. But right now, in the way of the gradual and slow downward action, this probably will be the primary level to watch for possibly taking the long position. That probably will lead us directly to level that we have specified. So let's suppose that our prediction will start right from the 1946 when the OP will be completed. Yes, this target will be slightly above the daily resistance 1990 resistance 1980, 1982 area. So the market could complete the OP. If it will be slightly lower, in this case it will be directly to the 1982. So that's the trading setup, but we could start the next week, and then let's see what will happen.